Welcome back, ladies and gentlemen. Long awaited, another episode of the Expert Trader podcast series. People tell us that we look alike. Omar, do you think that we look alike?
Yeah, I'm not gonna lie, I see it, bro. I see it.
Do you see it now? I was I
Yeah,
was like, I'm gonna turn on the camera and really verify, but I think you guys might be right. Welcome to the show. Appreciate you getting on.
yeah, of course. Thank you for having me on.
So, for the people who don't know who you are, you want to give a quick background, kind of your background story?
Yeah, so I've pretty much been trading since like 2017. Started in equities. Obviously, kind of transitioned into the Forex world in 2018 because like there was like in terms of like trading equities, you needed more capital. And one of my boys told me like, hey, listen, if you come into Forex, you only with the amount of leverage you have, you only need to deposit X amount. You can day trade, no problem. So kind of been hooked up on Forex since 2018. Started my journey there. Went through like the ICT mentorship. That was pretty good. Went through other mentors as well. Then started to find a lot more consistency around that 2020 to 2021. Was trading my own capital. Then obviously transitioned into props. For those that know me, I've kind of been trading majority props for since 2021, towards the end of 2021, going into 2022. And yeah, man. And then going from essentially a prop trader to now having my own evaluation firm with SFT, partnered with Paladin and Riz. And yeah, just trying to slowly grow that brand as well.
So, so before we're going to talk a lot about the prop firm space and kind of your transition over to prop trading, but what has been your experience like in trading? A lot of people have a quick rise and then kind of it goes flat for a while before you get it down. What was your trading journey like success wise?
Yeah, bro. I mean, honestly, it's the typical journey. Like you blow a bunch of accounts and then you have to restart. You're working a side job. You're trying to like make money. So I went through that whole path. I used to work at like a hookah lounge, barely making a few $100 every single week, working like 40 to 60 hours, a lot of like weekend shifts, a lot of night shifts. And then yeah, I think ultimately though, like in terms of my trading journey, I think when I started to really understand like trade management and risk management, I think that's when things started to kind of like play a little bit into my favor because I've always had like this, and I think a lot of people can resonate. Is a lot of people I think also have the skill set when it comes to trading, but the problem is they start to over leveraging. They start to see other people like flipping accounts. They try to emulate that, and then the problem is like you start to blow your accounts because you're trying to chase this big flip. And I was in that cycle for the whole 2019. I'd make money, blow it, make money, blow it, and I think finally understanding like, listen, I'm going to have to taper back the risk. Or if I go that flip account route, I need to make sure I withdraw because you're going to hit a losing streak. Every trader, no matter how talented, is going to hit some sort of like, back to back or maybe three losses in a row, four losses, depending on your system. And then you're going to blow the account. So I kind of have understood like, hey, I have to figure out what I'm going to do in terms of risk management. If I do go the flip account route, which is kind of what I was like more leaning onto, I just had to make withdrawals. I think when I started to have that distinction, and I started to have a little bit more money because I was like, I got out from the hookah lounge job, got a better paying job. Ultimately had like my own insurance brokerage. So when the money started to come in a little bit more, that also helps psychologically. Where it's like, listen, if I deposit a couple $1,000s in an account, I can go for a flip because if I lose the money, it will suck, but it won't be the end. It's not. And I was living at home at the time, so bills were very minimal. So I think that all of those things kind of transitioned to helping me to become a lot more profitable. And yeah, and then when prop firms came around, where like they were a lot more popular, like the FTMOs, that kind of set the stage even more because now it's like the ROI potential is just it just made a lot more sense from that perspective.
Okay. So I had no idea that you had an insurance brokerage. So we can talk about that a little bit and see how that helped. But you did mention something, which is the influence that other traders might have had on you and how it affected your ability to look at risk management. How do you think that social media affected you personally? Because like, we all talk about how social media affects traders, but what was your experience with social media?
Yeah, bro, 100%. Because I was the guy like who would see these guys flip accounts, and I'm not ashamed to say this. Like I would see someone like flip an account from. I remember, especially in the IML days too. I would go into this group chat and I saw like one guy flip $500 to like 10, 20,000, 30,000 in like a week or two, and you would see these crazy flips. And I was naive at the time because now I realize like some of those account flips might be fake. Not saying it's not possible, right? Because people always, I hate when people say this, bro. It's like they'll tell you that you're a hater or you have limited beliefs, but it's like no, I just know what goes behind the scenes, so I understand a lot of it can be manipulated. especially if someone has access to specific tools. Nonetheless, though, I understand it's very possible, but I just don't believe like a lot of these people that are posting it were doing it. But at the time, I was oblivious to it. So what happened is I would try to flip those accounts. And the thing is, to be fair, I will get to a specific point. But again, like I said earlier, you're going to go through that losing period, and if you're always over leveraging, you're going to hit that one trade that ultimately, blows your account, or it takes back all the gains, and then you have to kind of restart. So I was kind of in that cycle, seeing this person flip $1,000 to like 20K in 2 weeks, and just trying to always replicate that model. So it had like a negative toll, but at the end of the day, I think it's also just part of the learning curve at the end, right? So it is what it is, but I mean, it helped me grow because it allowed me to kind of look at that, try it out, and then realize, you know what, this isn't sustainable, and then look at how can I view other methods in order to find sustainability.
So what about now? When you look at social media today, do you still see stuff and you're like, "Oh," are you still trying to think about things from behind the scenes? Or how has that shaped how you look at things today?
Honestly, like now I don't really care because I think when I was younger too, I think a lot of like younger people, they're so like obsessed with like, yo, who's really making money, who's really not. And then as you get older, right? I'm 28 now. As you get older, and like you start to like, find your own path, you start to find your own grounding, right? You don't necessarily care as much. Like, don't get me wrong, I'll still see certain things and I just know it's BS. But nonetheless, like now it's like I don't really care as much. So it won't affect me because I know like the reality is this person might be faking certain results. But I also think it comes with a lot more maturity being in the space for like almost what 6 years, knowing like, listen, even if that person is like scamming, it won't affect my performance at the end of the day. If that person on social media is legit or not, it does not affect my life. It doesn't affect my performance. It's just mental energy that's being expended on that. So like nowadays, it doesn't really bother me. And again, I don't really care if someone's like legit or not. Like obviously, like if someone asks me, I'm gonna give them my honest opinion. Um, but outside of that, it's
So
not
you,
it's
so
not
you
like
think
a
it's best
big
to just stick to your own whatever is right in front of your plate and to stick to your own the things that you can control, and then that's where the results are going to come from. It's like looking at other people and getting influenced by other people really has never made any trader better, right?
exactly.
I mean, maybe if you're following the right traders. Okay, so if people actually, let's go into that too. So actually, walk us through the chronology here. Insurance brokerage. Talk to us about that real quick.
Yeah, so the thing is, I had my insurance broker like around the time when I was like around, I think, the junior year in college. I got it like, yeah, I had my insurance brokerage license just in the event because I was debating on dropping out of college, which I ended up doing. Then I was just working at a hookah lounge for a little while, and then I just transitioned into the insurance business because obviously there's a lot more money and more potential, and that was kind of like my quote unquote backup. I started that back in what 20 around the time I started like getting into Forex, so around 2018. So I was still trying to I was in the ICT mentorship back in 2018 as well. So I was kind of doing those two things on the side where it's like, all right, I know with the insurance brokerage, like the way that it works, it's kind of like residual income every single anytime someone renews a policy, I would get like some sort of commission check, and there's also fees, and there's different ways to make more money, like charging fees for like specific audits, all that stuff. So I was making money progressively and increasing my income while also learning how to trade. So that it was kind of like in combination with learning how to trade. And again, man, once it got to the point where like the money I was making from insurance was a little bit higher, it just helped my trading overall because now it's like, all right, I have more capital, but I wasn't just depending on more money. I was also improving the skill set simultaneously as well.
So that was actually going to be my next question, which is some people think that being a full-time trader is the goal. But my success came from when I had a full-time job and I started trading. I didn't need the money from trading. And so I was able to make the best decisions because I wasn't just chasing. How do you feel like having that secondary source of income versus trading and playing, that game?
Oh man, I talk about it all the time, bro. And especially like like as you I'm pretty sure you heard Kyle talk about it as well, Jade Cap, and Paladin and these guys. Like, and that's why I'm happy to have these guys as friends because we always talk about these things. Everyone that's actually making money would agree to that, right? Because, dude, for someone to and it's funny because if you look at the crypto world, a lot of the crypto degenerates and people making a shit ton of money, there are people that have money to kind of just blow. Because I've noticed there was like a lot of people that went from the e-commerce space and they kind of transitioned over to the crypto world, right? They found some coins, and I think crypto's a lot easier than Forex when we're in a bull market because you can literally just buy anything and it'll go up like 5x. But it was those people that already had like that money coming in. For the most part, you're gonna have outliers, but the people who have money kind of be able to throw it on an investment, right? Being able to throw it into a trading account and like learning, whether it's buying an evaluation challenge or whether it's depositing into your own account and flipping that money or like slowly, gradually increasing it. So it's very important that people, especially the younger crowd, man, because a lot of the younger kids, um, if I could tell myself in my early 20s what to do, it would be the same thing I did, where it's just like, hey, listen, get some sort of high income skill or high income job and do things simultaneously. Like, I there's no reason for someone to just like trying to focus all my efforts on trading because reality is like you can focus on trading on the weekends in terms of like back testing, journaling, studying the charts, going over videos. But then during the week, when you're actually trading, if you're trading this 1 or 2 sessions, it's only going to be 3 to 4 hours a day. And that's even like on the longer scale in terms of on looking for the setup. So you have the rest of your day to make money, whether someone wants to get an afternoon job, an overnight shift, whatever the case may be. Like there's no reason, especially being early on, where it's like, oh yeah, I'm just gonna learn how to trade, and then you're wasting those years where you could be making extra money as well. So especially if someone's like younger, man, when they're like in their early 20s, even there's teenagers now coming into the game. I would suggest like, listen, go ahead, find even if it's like a regular job, maybe even find some sort of a job that you can kind of level up in. Because if you can get a job straight out of college or whatever the case may be that can get you 80K, 100K for the
Yep.
year, like,
Yep.
dude, you're gonna set yourself up psychologically for trading because you're gonna have that money coming in, and then you're also able to learn the skill set while you're making good money.
For sure. But I mean, now you have a firm, so we can kind of talk about some of the things that you see in the back end. I'm willing to bet that the majority of the people that blow their funds just trying to rush it is because they're trying to use trading as that main source of income. It's like if you had this is their last bit and they got to make this work. They have to pass this challenge in order to make this their last 200, $300. You cannot trade like that, people. Go get a job. Whoever told you that a 9 to 5 was a scam and all this crap, they lied. Okay, it's their only chance that you have. Now, talk to me about. I mean, you said a lot of important things. First off, also worked at a hookah lounge. That's crazy.
Yeah.
What kind of insurance did you sell? Was it life,
Property, it was
health?
property, yeah, property and casualty. So pretty much
Oh,
homeowners, commercial, workers' comp, disability, like all that stuff for businesses and
okay.
for residential stuff as well.
All right. Let's get back into the trading side. When you got into the prop firm side, was there any changes that you had to get acclimated to how you looked at risk, how you played the game, or were you able to transition everything that you knew over to the prop firms?
Yeah, so when it came to like honestly like my training didn't really change because I kind of it's actually interesting because a lot of the stuff that the cliches that people talk about in terms of trading, like let's just say, people should aim for a little bit higher risk reward, right? Or, less trades is better. Like all those cliches, we actually have the data now to kind of confirm a lot of those beliefs. So like because I was always basing things off of like my obviously my own trading performance first, but also listening like, hey, what are people saying? Like, what are the top professionals saying, right? Like, on all these different podcasts of like professional traders that actually work in brick and mortar prop shops, like an SMB Capital, right? These professionals, I always like look at what they're saying, what the top traders over there are doing, and so I've always kind of followed that blueprint. So after opening up the firm, nothing really has changed because that blueprint that they've actually kind of assessed was actually very, very similar to like the traders that we see at SFT, right? So I'll give you a good example. Something that you brought up that was actually very, very like true is most people are trying to rush the evaluations. It's funny because for the longest time, people were complaining about, oh, I only have 30 days to pass an evaluation, right? And now that every firm is pretty much unlimited, nothing's changed because the majority of people that are failing within 10 to 14 days. So
So
even
you're saying
though
that eliminating the time limit had no effect on people's like the rate that people were passing the challenges?
no, like not yeah, not at all. And well, the thing is, we've had like unlimited trading days from the jump, but like even speaking with other owners and stuff, like it's the difference that they've seen from like time limits to no time limits. It's pretty much very insignificant, maybe like 0.01%. Like it's very insignificant. And at the end of the day, like don't get me wrong, it's a great tool to have because there are people that do like to take their time. And for those individuals, it's fair to them to take their time. But it doesn't affect anything because the amount of people that were failing again are typically 10 to 14 days. So they're not even giving themselves the chance to get to 30 days, which is just like something that's like super interesting because that's the majority of people that are failing
Hmm.
because they're impatient, they're trying to push. And another metric that we've actually found that was very, very interesting is I know for SFT specifically, 70% of people are failing because of the daily drawdown. So they don't even use the max allocation of drawdown that they have because they're trying to rush it. They're trying to risk the maximum amount that they have, and then if they hit their daily loss, because they're flirting with that daily loss because they're putting on too much risk, and that's 70% of the traders are failing. So it just goes to show people are over leveraging, people are not taking their time. So yeah, man, it kind of confirms everything we typically believe about the industry.
So it's safe to say that if people started looking at trading with longer time horizons, they might be more successful.
Yeah, but I also think, and I think when it comes to brokers or firms in general, I think the biggest gap and discrepancy is a lot of people, and we see it through our support staff, is they don't necessarily understand like trading. So I think a lot of people come into trading without the knowledge because if I could do it, the amount, and I've talked with other owners as well, the amount of people that talk in the support staff asking about what's margin, what's leverage, like the very basics of trading, like, oh, how do I download the platform? Very basic stuff, it's just incredible. And it just goes to show that how many people are really actually how many people are educated when they come into the space in general, and not just firms again, but like I'm pretty sure if like let's just say you went to a broker, right, and then you said, hey, what are the common questions that people ask in terms of the support staff about the product or whatever the case may be, you'll probably see something very similar. So I think number one, a lot of people that are utilizing firms, they're probably not even equipped to really make money in trading regardless. I think that is the number one thing because just seeing through some of the inquiries on the support staff, it just kind of shows the level of like knowledge that some people have.
I mean, you know how like FTMO has their own education section? How much
Yeah.
responsibility do you think lies on the prop firms to make sure that people are educated before they're getting involved or just informed at least?
Yeah, it's interesting that you say that because I know, like with us, we have like a tutorial section that we just implemented, and we're going to make specific videos for it. But I guarantee you this, and I could share this with you probably like as we have a little bit more data on this. But I guarantee you, like you'll probably see like the open rate or like the amount of like people that actually watch the videos. It'll probably be very like insignificant. And I think it's because like all the basics is all on YouTube. So like I understand like having the firms, I think firms should offer some sort of like whether it's like some sort of webinars, whether it's some sort of like education, right? I do think that's the bare minimum, but it's also up to the trader to kind of seek that information because with today's world, like you know how it is, man. There's so much information out there, good and bad,
And bad.
that's ultimately up to the trader. Like, listen, if you're someone who's like taking this a little bit serious, you should know how margin works. You should understand leverage. Like, these are all the very
Bro,
basic
I'm all
requirements.
about personal responsibility. Listen, you're preaching to the choir here.
Yeah,
Everybody who's listening to this that knows our channel knows I'm all about personal responsibility, and everyone should be an informed participant. But I also feel like because there's a lot of bad information out there too. I mean, the
agreed.
basics about margin and equity, guys, read a book, right? Read a basics. Okay. So you mentioned now that you have a firm and you've kind of transitioned from being a prop trader to having your own prop firm. You mentioned there's some cliches that you used to see that have been confirmed with the data in the backend. What are some of those cliches that are true and which ones aren't?
Yeah, so like one of the biggest cliches, you know how like people always talk about, hey, take less trades, less is more. Like that is actually very true. So we've compiled a bunch of data in terms of like the last 4 months, and every month was the same. So we always try to assess like the traders that are passing evaluations and the traders that are failing evaluations. What are some of the key metrics? And obviously for me, I'm focused on risk reward. I'm focused on holding times. I'm focused like because we have a data analyst who's grabbing all this data for us. Um, how many trades per week, right? And the traders that are typically averaging around 1.25 trades per day. So it's roughly around like 5 to 6 trades per week. Those ones were actually performing better and passing majority of the evaluations from our phase one and phase two. However, like the traders that were like not doing that great, they were typically taking almost like double that amount. So almost 8 to 9 trades for the week. So it's like, just under 2 trades per day. So that was consistent through every single month for the past 4 months. And I'm pretty sure like as we move on, it's probably be the same thing. Another thing that people was in terms of a
Interesting.
cliche that was, yeah, go ahead.
I was just gonna say that's interesting. All right, well, go ahead. What was the second cliche?
Yeah, and another cliche, you know how people always like make fun of scalpers because they're like, oh, that's too small of a time horizon. And I don't want to, I'm not saying this that like if you're scalping, like you
No,
should just
you're about
completely
to speak my language. Go ahead, say it. Tell them. Tell them.
But like I was interested in like, you know what, let's confirm that, right? And again, there's always going to be outliers. So I'm not saying if you're scalping that, stop doing that because there's always outliers. But the whole times of traders that was like so from profitable like traders that were passing evaluations and getting to payouts versus ones that were consistently failing. The traders that had longer hold times were actually overall more profitable and more and paying and passing more evaluations. The
Hmm.
traders that had a lower hold time were the ones that were typically failing more evaluations. So we measured it in like in terms of hours, and so it was about for I know for the month of November because I just did a video about it. For the month of November, it was around like 2 hours whole time for people that were like failing a lot of challenges, and the ones that were passing were around like 3.45 hours. So again, almost double. Now, obviously, I would assume that like the minor scalpers are like in and out 5 10 minutes. They're bringing the average down for those
Okay,
traders as
okay.
well.
So you're talking
Yeah,
about intraday traders, not necessarily scalpers. Because I also feel like scalpers might be bringing the percentage down for sure. Like intraday trading 3 to 4 hours, was that those were
yeah,
the
that was
people
a
that you
sweet
saw
spot of
passing
like
the challenges?
yeah, so like majority like
Hmm.
that sweet spot was 3 to 4 hours. So typically people had higher hold times, they were more profitable. But again, in terms of the hours, because it can differentiate, because you can have a profitable trader who, let's just say, is holding a trade for like 30 minutes, an hour, but then you also have a swing trader who might be holding it for 6, 7 hours. So obviously those are averages. But from what that tells me is like traders that are having longer hold times are typically going to be making more money. Now, what's interesting now, because I'm just thinking about this as you brought that up, now it's like, hey, what are the percentage of people that potentially failed holding from 1 minute to 1 hour and then kind of segment it that way to kind of get a better statistic. So I'm actually going to make sure to take that one down because I think that would be a better metric to see how many people are passing per hold time. So like someone who's holding 0 to 1 hour, 60 minutes to 120 minutes, and then see is there any correlation between that as well.
But this is how I found my personal strategy. Is obviously there was a technical aspect to it, but then I went through the stats and I started looking at hold times. So duration, what you're describing is called duration risk, which is the
Yeah.
longer you're holding a trade, the more likely it is for something to happen. We're going to go into a trade war with China. Something's going to escalate in the world, and the risk that your trade reverses gets higher. But I went through the data and saw, okay, the scalp trades that were between 1 to 5 minutes, they were dragging down my account the most. The
Yeah.
trades that I had that were under 30 minutes, they were always profitable. The trades that I had for 2 hours or less were the most profitable. Anything over 2 hours was a loss. And
Yeah.
so I started to realize, okay, I'm going to build my strategy based on this information too. Am I more profitable on the buy side, sell side? Which days of the week, times of the week I'm most profitable, and then also duration for holding the trades. So people got to use the data, guys. Use your data. Now, what have you realized in the data that shocked you the most?
Um, I'll be honest. I think I mean most of the data was kind of like it wasn't shocking. I was just more shocked about like the 70% that are failing based off the daily drawdown. And it's been consistent with us since like the last 4 months. So it's not just like a 1 month thing. Um, people are just and I would be interested to see how other firms data is when it comes to like people losing the account daily drawdown versus max because that just tells me that people are over risking because think of it from this perspective, right? Let's just use a 100K challenge account. 5% is 5,000 for someone essentially risking 50% of their account because obviously your account is as much drawdown that you have is a little bit insane. And I understand, like, listen, I understand because I've talked about it before. Like with challenges, if someone has a big bankroll, they just might put on 2 to 3% risk per trade, and just to try to finish the challenge because they know even if I fail 2 challenges, if I pass one and I get consistent payouts from it, it's going to make up for it, right? Nonetheless, for someone to get close to that 5% or whatever it is, it's just mind blowing to me because why, like, even if you're doing 2% risk per trade, right? It's like, all right, if I take one loss, I take a second loss, I'm down 4%. Like, why even risk it and even take another trade after that? Or someone who's maybe taking 4.5% risk per trade, and then from that perspective, why even cut it close? You know, like, or like if you're down 2% on the day and you're trying to risk like maybe 2.49%, like why even allow yourself the opportunity to breach that threshold? So that part was a little bit shocking to me because I would think most people use the full drawdown that they have.
Real quick on that, because I guess people now everyone knows what not to do. But since I have you here, what is your perspective on risk and how do you look at risk in your own account? If you were to do a challenge, obviously you're not risking 50% of the account in the same day. And so how do you look at risk?
Yeah, so I have the way I view it is like two different like mechanisms from challenges and funded, right? So again, that's why I'm always very upfront. When it comes to the challenge phases, I'll risk anywhere between 1 to 2%, right? Sometimes a little bit higher. Like if I build a buffer, like let's just say the first couple of trades hit, and I have like let's just say a 3% buffer or whatever on the account, 4%. Like I'll risk 2 to 3%. That's only after a buffer. And a lot of other traders I've talked to, they have the same approach where it's like, all right, I'll risk 1%, 1%. But if I hit a nice 3 hour trade, if I hit a 4 hour trade and I have that cushion, my next trade might be, maybe 1.5, 2%,
Mm,
depending on how much buffer, right? However, for the funded, and I've gotten, I used to have a different approach where I would risk a little bit higher, but after speaking with Kyle and obviously him getting like up to 4 million in funding, and even someone like Andrew, I don't know if you, from Twitter, who also has like I think he just got 6 million in funding across multiple firms. You know, just they kind of broke it down like, listen, dude, if you just do 0.25% risk, you get like 3 R here, 2 R there, -1 R, -1 R, whatever. But if you end the month even up 3% on like 4 million, that's 120K pre-split. So they were like, they kind of just changed my philosophy on that, where it's like, listen, yeah, on the challenges, maybe risk that 1 to 2%, but then when you get to that funded, just preserve it and then just add more firms to the arsenal and then build it that way because it's much less stress doing it that way versus trying to put on big risk because you're going to blow the funded at some point doing that. So that's just my advice to people. And
that's
if you have a
awesome.
smaller bankroll that you can't afford to lose a challenge, I would suggest, again, like we talked about earlier, getting a job because you don't want to put too much pressure on yourself to pass a challenge. Because at SFT, for example, you know not it's very rare for someone to get to pass an evaluation without failing one first. Like that is very far and few in between. I think on average it's about 2 to 3 challenges failed before someone gets an evaluation. They pass an evaluation. So understanding that, I think people should also make sure that they have enough money that they can go ahead and maybe purchase an evaluation once they feel like they're ready.
For sure, but there's nothing worse, and that was really well explained. There was nothing worse than failing a challenge and then letting that affect your confidence. Think be like, maybe I'm not ready for this, maybe I shouldn't be taking this. And I hear it a lot because we do offer coaching for traders, and it's the same story over and over again. It's like when you fail one and you think that that is a representation of whether or not this is for you or not. And so that's really good to hear that it usually takes a few tries. Now, how long does it take for the average trader to pass a challenge? And then the ones that actually get to the payout, what are some similarities there and how long it takes them to actually pass?
Yeah, so no, that's a good question. So, like, for the traders that are passing the evaluations, it's typically around that 2 to 3 week range. So they're kind of right on the outskirts of those that are failing in 10 to 14, and then the ones that are passing are typically around that 2 to 3 week range. It's around 14 to 21 days. So, like, even the traders that
Mm,
are passing, they're not really taking a very, very long time either. So I think it's that balance of I really think it's just that balance where you're not risking too much on the onset, but you allow yourself the few weeks to get it. Because again, if someone's risking, let's just say 1%, 2%, again, everyone's going to be different. You can get to the profit target in 3 to 4 weeks, depending on your win rate and your average R. So that's typically what we've seen. And what was
bro,
the second question?
oh, really just what are the similarities between how long it took everyone to, you basically answered it. You said 14 to 21 days.
Yeah,
That's interesting because, bro, it takes me so long to pass challenges because I try to trade the same on now that there's no time limits. Now I
yeah,
try
yeah,
and trade the same way on the challenge as I do on the account. Because having to switch from a high risk strategy to a low risk, you're going to be tempted to go a little high risk because now you just
yeah,
went from
definitely.
seeing what you just did to being like, come on, bro. Like, I really want to play this game now that I'm here. So, are you seeing people pass challenges using a lower risk approach, or do you feel like it just takes so long that most people get impatient at some point and end up blowing it, or what's the deal?
Yeah, I think and it's interesting because most of the times when, and even speaking with other people as well, most people that are kind of like passing the evaluations, they're still taking like decent risks. So that is like 1 to 2%. But the thing is, I think like their trades are a lot more like focused. Now, I will say there's the very common theme, especially with the ones that are failing, they're just putting on like way too high of a risk, where like they're putting on that 3 to 4%. Which again, that's the reason why a lot of them are hitting that max daily loss because they're just pushing too much size, right? Versus like I think 1 to 2%, even though some people might consider that risky, it's all dependent on someone's risk profile because one person might feel completely comfortable risking that. Another person might be like, "Whoa, that's way too much." And again, there's no right or wrong answer because it's ultimately what works for an individual. If someone's more laid back with their risk and they're more conservative and they just want to take their time with
Yeah,
it, then it's fine because at the end of the day, there is no time limits across all firms now, right? I mean, I'm pretty sure some firms probably still have a time limit, but for the most part, you can get funded from FTMO and these other bigger firms without a time limit anymore. So there's no rush at all. So I think it really just depends on
100%.
the individual, but at the same time, the traders that are passing, they also, from what I'm seeing, is like they also don't want to necessarily wait too long because they're still putting on risk, but they're not putting themselves in detriment where it's like one trade blows their account, you know?
Okay, so they're not being too conservative to where they're like playing with their food, but they're also not going reckless because there is a fine line. Like you just said, even
Exactly.
if you hit a losing streak of 3, 4 trades in a row during a week or 2 week period, that's not going to get close to the maximum daily loss. So you're still within that risk parameter if that's in your plan. So okay, very fine line there. Any other similarities between the people that are passing? And look, I want to separate this between people passing and then people actually getting to the first
Get
payout.
paid up.
Because that first payout period, I think, gets more people than the challenges themselves. So walk us through that.
Yeah, so those are like pretty much for people passing. Now I have to again off the top of my head, don't quote me on this, but I think the people that are actually getting to pay out after they pass phase two for us is around like 35 to 40%. I'd have to double check that up, but I'm pretty sure it's like around that 30 to 40%. I'm gonna give myself that 10% buffer from phase two to the actually getting funded. And I actually just recently talked about it with like the top performers, right? The very common similarity, the number one thing that I've seen across like people who are getting consistent payouts, not just one payout, right? But they're getting that two payouts plus. And even like if they fail it, I see them back on, let's just say the leaderboards, and I see them back on the back end dashboard. Those traders are typically focusing on 1 to 3 assets. So it gives me the understanding that these guys are typically just that their level of focus is just very pristine because they might trade like a gold and they might trade GJ, but it's like if you go through the trade history, it's like gold, 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 GJ, GJ, gold, 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 GJ. It's very consistent. And another thing that's very interesting, and I've spoken with other people about this. I know Angelo talked about it on a Twitter space one time, and it was the same thing with CFT, where traders are typically the best performers are typically not scalping one day and they're not swing trading the next. So their hold times obviously is going to be outliers, but on average it's going to be very very similar. So if someone comes in and like let's say scalps one day and then they're swing trading the next week and then they come in and they're holding trades for like 2 hours, um, there's okay to have discrepancies, but the people that have very similar approaches are the ones that are typically performing at the highest level. And I'm pretty sure if you ask any like firm owners, brokers, or whatever, if they assess the data, I'm pretty sure they would see something similar, which shows to me that focus and consistency with their approach is very, very important.
So if somebody was to say trade one instrument like Nasdaq, for example, like the Nas 100 index, and that's the only thing that they traded and focused on that. And instead of switching strategies between 1 day swing trading and 1 day scalping and 1 day intraday, they stuck to one model, one strategy, and they stuck to one instrument. That would give them a higher probability of being successful with prop firms.
Yeah, like from what the data suggests, I would agree with that. I would say 1 to 3 because there are traders that like they're not only trading one thing, but again, it's like in that range of 1 to 3 because I see all the time, especially like with some people that I've talked with, because I trade primarily euro, but sometimes they'll go into a period of consolidation, and some people might not have the patience for that. So that's why I say like 1 to 3 because if one asset class might be beat a little bit like it might be in consolidation on a higher time frame, you know what? Okay, like you said, Nasdaq might be consolidating, but guess what? I'm watching GJ, I'm watching gold, and I'm seeing a clear trend on that asset.
For
So
sure.
overall, yeah, and it makes sense because, dude, can you imagine having like 20 charts that you're flipping through every single day? Like it's just
I
very,
can.
very
I can
difficult.
imagine it. We've all been there. Bro, I used to
Yeah.
sit there and just go, I had every single euro, every GBP pair, and I would just go through all of them. And if GA did not have a fucking move, if GBPCHF had a move, and I had never traded it before, and everything else was dry, okay, I guess I'm going with that one.
Exactly.
And it works just enough to get you to keep playing that game, but it's not mentally healthy. When you have one
Exactly.
high volatility instrument like Nasdaq, and you understand in depth the personality of that pair, you can take advantage of it on a regular basis because the same players are playing the same game all the time. And then, like you said, with swing trading Forex, that's why it makes sense to have multiple pairs because sometimes the USD is consolidating. You need
Yeah.
something else to be a driver. So, like the bank of that's why I have USD JPY and I have Euro USD. Europe and Japan couldn't be any further apart. Actually, besides they both have shitty monetary policy. But
Yeah.
besides that, they're not really that correlated, and so I'm able to find swing trading moves on all the pairs. So I think it's pretty interesting. Okay, give us your strategy for passing these prop firms because you've been very successful as a trader yourself, and then now you have access to the back end stuff. But take that aside, is there a game to passing these challenges? And if there is, could you break down how you see that game?
Yeah, and I talked about this multiple times. With even with me and Paladin did a podcast with one of our first traders in terms of a payout. And in that podcast, I even talked about it as well, where it was like, I truly believe that most people, when it comes to valuations, should have a specific budget set. So let's just use a hypothetical example. Now, you know what? I'll use an example that I recently used. So like a Black Friday offer came. So I'm like, all right, I'm going to buy a bunch of challenges with FTMO. They never do a Black Friday offer, but I'm like, you know what? It's worth it. So I set a specific budget across. I'm gonna like, hey, I'm gonna buy X amount of 200K challenges, right? My goal is to trade them all separately. Some people like to put all the accounts together. Me personally, I'm not a big fan of it because I understand there's a very high chance that someone's gonna fail an evaluation, no matter how good of a trader you are, right?
You mean
Even like
put
someone
all
like,
the accounts together, like link them with a
yeah, like
copy
with the
trader or
trade
something?
copy.
Okay.
Yeah, but for me, I didn't want to do that because I'm like, listen, I want to just put. If I'm gonna take one trade, I want to be on one account because I don't
Mhm.
want to risk taking it out. Obviously, the upside is you pass all of them at the same time, but the downside is you could fail all of them.
Yep.
But nonetheless, like I have that approach where it's like, listen, if I have a $4,000 budget, I'm willingly, using for challenges. I'm like, all right, cool. I'm gonna buy X amount of challenges that fit that budget, and ultimately I'm going to have multiple accounts. Now I'm going to trade every account every single week, risking 1 to 2%, and then I'll go on to the next account only once I pass a phase one. So if I pass phase one, there's typically a waiting period depending on the firm, like about 24 hours. I'll start trading the other account. I'll leave that phase two. I won't take any trades. I'll just focus on that phase one on the next account. And for me, I typically do like 1 to 2% risk. And I'm like one of those traders that like to go for higher risk to rewards. So like an M5, M15 entry, but like a 4 hour, 1 hour target. So if I hit a 3R, if I hit a 4R, I'm pretty much, especially if I'm doing like 1 to 2%, I'm getting close to that profit target. So some weeks, sometimes I could finish a challenge in a week. And at the same time, sometimes I might blow one in a week if I put on too much risk. But I understand, like, listen, I'm going to have a budget every single month for challenges. I'm not going to exceed that budget because at the end of the day, it's like, listen, you have to treat it like you said, like it's like a business at the end of the day. You understand, like most people that are getting evaluations and passing, a lot of them are blowing accounts on the way to passing one. So if I understand that that's across the board, no matter how great of a trader is, I'm going to make sure that I'm putting the proper parameters around myself that don't allow myself to keep blowing challenges because it's a very common thing and it can kind of lead to gambling where people are just buying challenges, trying to full port blow it, trying to full port blow it, and then just gets into this negative state of mind and cycle. So that's kind of my approach. Trade
Uh,
every account individually and just have a specific budget for challenges.
So I love that. And then one theme that you keep saying is that don't take the challenges too serious. Like if you have a budget or you're
Yeah.
able to take multiple challenges, it's going to take the stress off and then you'll be able to have a better chance of passing. I think that's my biggest takeaway. But one thing that I've seen with managing multiple accounts is what if you choose to put this account to the side and stop trading it for now, and you're going to take
Mhm.
this trade on another account. That trade hits, but that would have been the exact amount you needed to pass the other challenge. Have you ever
Yeah.
experienced that where you're like, damn, I should have taken it on this account instead? Or
No, I mean I used to, but like to be honest, bro, like now it's like because you also have to think of you can't think of things always in a positive scenario because it's like, well, what if I took a loss? I would take a loss on that account too. So I understand like the benefits of having all the accounts linked because yeah, like if I make 500 bucks and I have, on this account and then I have multiple accounts and it was linked, I would have made 500, 500, 500. But then I'm like, listen, if I lost 500, I would have. So my mindset has just shifted now because I think a lot of people who are younger, like who could
yep.
take on a little bit more risk, who push size a lot more, they're going to have that issue of like, all right, I want to push because I can make more money if, and they're going to have that little distinction of like, you know what, like, damn, I could have made money on all the accounts. But the way my mind works now, obviously, having a lot more responsibilities, being older, like I'd rather just not play it safe because obviously, like with trading, you have
You
to
just look at
be
things from a
comfortable
risk
putting risk.
management perspective instead of the
Exactly,
upside perspective, which is really, I think,
exactly,
that's the crossover between a boy and a man in trading. It's like when we go from the gambler to the trader, right?
exactly.
That's when you start looking more at the downside or the downside priority versus how much upside potential there is.
And to
Because
be fair, and I do want to put this caveat as well. That might mean that I might not have that huge payout or that huge one payout process. But my thing is this: is like, dude, if I can get like if every biweekly payout can be anywhere between 7 to 12K, but I can do that consistently on a consistent basis, do anywhere between 20 to 30K, or maybe 15 to 30K every single month and just add more capital and slowly just increase it. I'd rather go that route. Obviously, the traders that are on these leaderboards, let's be honest, like they're going to put on a lot of risk,
mhm.
and their upside is way more than someone like me, whose upside might not be as high because I've shifted the focus a little bit to just being like conservative. Like, hey, if I just make 2%, 3% on the biweekly payouts, I'm just focused on gaining more accounts. So I do want to put that caveat out there, but people don't understand as well the people on the leaderboards, you have to remember, like they're probably someone who's like very financially well,
But
and like a
this
Pasquale, for
goes back
example.
to the not comparing yourself. Like the whole comparison
Yeah,
thing that we were talking about with the social media is if you're comparing yourself, you're going to make decisions that have nothing to do with trading. Like
exactly,
your system says you have a positive expectancy system, you have a risk strategy, and that's it. Somebody else's full margin decision over there has nothing to do with your own results. And so it really does go back to that comparison thing where if you guys follow all the things that have led to successful trading, less is more, like you mentioned, not rushing, not feeling this undue pressure because now the time limit's not even here. And if you focus
exactly.
on that stuff, you got a pretty good shot at this. But if you're gonna focus on, you know, I was gonna say some shit like one of the names that are very common on the top, like Mo number 75, who just always on the leaderboard, or full margin trader number 6 on social media, you're gonna blow it. There's only one way this goes. All right, so that's awesome. One big thing I wanted to ask you because I appreciate you taking some time for this. What are the common traits of the people that keep an account versus the ones that make it to a first couple payouts or the first 2 3 months versus the ones that make it 6 months plus or 8 months plus?
Yeah, so that's something that we're still kind of monitoring because like SFT, we've only been around for 6 months. But there is one trader, there's only one trader that hit the scaling plan and been able to scale up his account and get like a higher payout split. But that guy, it's the way he trades is very similar to like a lot of the stuff that I was saying, where he's just locked in on 1 to 3 asset class. I think he only trades two things. I'd have to double check. But and again, he has the same consistent approach, and I think like the way that that individual trades, he also doesn't take on like massive risk on the funded. Like it's a smooth equity curve. The win rate isn't anything crazy, but it's like he'll catch good moves, and that's like the bulk of the trades. So like his equity curve is like steadily up, but the win rate I think was like around 47%. Nothing crazy, but again, because the whole time is there, where I'm assuming that he's able to catch a lot of these bigger moves and he's allowing the risk to reward to kind of make up for a lower win rate, which I think will benefit most people. Um, I think like that's what he does very well, and it's the same consistent pairs that he's trading. I think he only trades like gold and one other asset. I'd have to double check, but I remember gold was up there. So again, just the same consistent approach that he's been doing, and he's been able to get three payouts and able to get up to scaling.
So survive long enough to hit those big days. So it's going to be base hits on most days, and then you'll hit a home run every once in a while as long as you're not chasing the home runs and blowing the account on the way. Basically, this is good stuff. This is solid. All right, here's the stuff I'm really interested in. We're going to go through a fire round. I want to know the most profitable pairs on the platform, and I want to know the least profitable instruments.
All right, so the least, so the most profitable is based off like per month. It was actually, you know what? I have the stats here. Let me pull them. I already. Let me start off with the least because I already know that one. That was Nas 100. You saw it on Twitter. We talked, and dude, it's there religiously. Like every month, we do the assessment. Nas 100 is there almost every other month, and if it's not number one, it's usually number two or three. So it's like in the top three. The number one profitable pair across multiple months. Uh,
I think this one shocked me. I think it was US 30 or something that you said.
Yeah, it was 1 month though. That was only for
Okay.
1 month, and then it kind of dropped off after that. But I have it right here. I took a
Euro
picture of
USD.
it. Yeah, I think it was zero. Let me just confirm. No, it's actually so last month was dollar yen, but euro is pretty much up there in the top three of like pair profitability. But every other month is kind of like difference a lot. The worst pairs though are NAS and gold, and yeah, NAS and gold are typically the worst performing pairs in terms of like long accounts. And the best is yeah, usually around dollar yen and euro. So what's interesting, and that tells me that people can't handle the volatility. Like it's weird because like some of the top traders do trade gold, but majority of people are losing money on gold. So that's like a nice little contrast where like even though the top guy is like around is trading gold consistently and he's doing very well doing that, the other individuals for the most part they can't handle that volatility because gold and Nas 100 is number one. Nas 100 like majority of people cannot handle, in my opinion, the volatility. Even though it's a very popular pair, but I just think people they get so sucked into a specific asset class because it's popular versus like, hey, being honest with themselves. Like people make fun of me for trading euro because they say it's slow and stuff. I'm like, listen, man, that works for me. Whenever I trade something highly volatile, it doesn't fit my personality. I personally can't handle it.
Exactly.
It's
It's because they
fine. Like
see someone
I'm okay
having a
with
lot
that.
of success and they're like, well, I want the same results as this person, but not realizing they have a completely different personality than them. How am I
Exactly.
supposed to trade like Q if I don't have the same personality and I'm not going to trade that same method? And so I think that's people are kind of just chasing where they think the money is, but they don't have a clear system, or maybe it's just not a good personality match. There's two other questions I wanted to ask you before we wrap up. Number one is where are your trading goals, and where do you want to take things in terms of your own progress?
Yeah, so like right now, like my like for me, my goal is to get to like that 2 to 3 million in terms of like having those prop firms. And listen, man, I've people always tell me like, oh, like you're still using prop firms, blah blah blah. Like you're still using these firms. I'm like, listen, man, I will use them until there's no longer an industry anymore. Because for me personally, and again, I'm not saying this because people always think like the reason why I got into like the evaluation firm space is because like I've had success with it and I grew my brand around that. Right. So it's not like I'm not pushing the product because I just have one. Obviously, it's like promotion at the end of the day. But even if, I'm always very honest with people. Don't take an evaluation firm if you're not. Don't even trade in general. Like, don't go live with any type of money if you don't have the skill set or you're still developing. But nonetheless, the way I see is I just want to gain as much capital as possible. I've been in groups like with like friends that are all trying to aim for like big numbers, like 4 million across all these different firms. Some of them have 5 million, some of them have like 1 to 2 million, and they're all trying to just slowly level up. And that's where I kind of see myself because again, it's just numbers. If someone gets to 2 million and they do 3 to 5% a month, right? If they do 3 to 5% a month on average, obviously you're gonna have some months might be worse, some months might be a little bit better depending on market conditions. But if you do, let's just say 3% on 2 million, that's 60K. And then after the split, which is like around 80%, you're pretty much taking home 48,000, which you're making $500,000 a year if obviously you can maintain those accounts for a 12-month span and you maintain those averages. But nonetheless, and that's all without risking your own capital. And that's the thing that I've always been a big proponent of.
Yep.
Like just
Which is
allow
why
the
it's great that
accounts
you
to.
guys are running. And I didn't mean to interrupt, but
No, no,
I
go
have
ahead,
to say
bro.
this: you guys running the firm that you are, it makes sense that it's for traders by traders. The fact that you guys all kind of came up from the prop firm game and then were able to build rules that you yourself could benefit from, like that seems like the right direction for things to go. Is people who actually understand that side and then who are building it from that perspective.
Yeah, and I
I think
agree,
it's
man.
great.
And I think that's a big edge as well. Is like because a lot of people they get into it because like of the money, and like I'm not saying like oh yeah we're like God's children and we're like we're not trying to like make money. Of course we are, right? At the end of the day, but at the end, but we also understand the product. I feel like a lot of like quote unquote influencers may have just jumped on the product, even though they've never. I've talked with people who've never taken a prop firm challenge, and they're opening up these firms. And again, I'm not saying that's right or wrong because there's some people that I know who've never taken a challenge. Well, I take that back because even those owners, they told me how much they spent in challenges before. So even they like have some sort of experience. But I think understanding the product is very important.
Was that
Unless
experience
someone,
positive?
no, 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 they lost a lot of money
Yeah,
from
they
it.
lost a
Yeah.
lot of money, right? So so it's like you guys were able to understand that game and understand trading because it does take a lot of discipline and mental strength to be able to have a system and stick to it. And it's a different mindset of an individual who can be profitable as a trader and then transition into doing businesses and be successful versus someone who couldn't cut it was like, all right, I'm going to take the easy way out. And well, it was not even easy. Running a business is not
Yeah.
easy at all, but they're going to take a different route there. This is a fan question. People want to know. They've seen you training on social media. All right. Could you beat me in a fight?
I don't know, man. We have to wait and see. Might set up for the next FX Summit. A nice little
Okay.
sparring match.
No, I'm joking, bro. I would not fight you. Come on now. But you know we're boys, right?
Exactly. Now we could do a nice light sparring session. I'm pretty bro. I'm very controlled. Like we could just do something a little bit for fun. But yeah, dude, fighting. I want people to understand too. Like the whole Traders Fight League. Most people like I've seen like obviously we were joking around about it, but dude, I don't think people understand. Like it's very dangerous, especially if you match someone up with someone who's like decent and someone who's like a lot more skilled. So like I know we like the Traders Fight League was a little funny thing, but like I don't think people realize it's pretty dangerous, guys. I
The
would
risk
not
and
recommend.
reward does not add up. All right. There is no risk and reward.
Exactly.
It's like a lot of these guys are they're already a few brain cells away from from being a liability. The last thing you guys need is to step in a ring, especially with someone like myself or potentially anybody who's well trained in this game. So
Yeah.
yeah, stick to trading, y'all. Stick to beefing on social media and just leave this one to somebody else. Omar, I appreciate you stopping by. I want to have a part two and really dive into some of the data a little bit more, but appreciate you breaking all that stuff down. I learned a lot here.
No, I appreciate you, man. And like, yeah,
Yeah.
definitely. We'll run it back. Especially as we get more data and we get more stats, definitely more than happy to share that, man. Because that's at the end of the day, just providing that extra tool, extra resource for the community for traders. It might make a difference, it might not, but at least it's there.
And where can people find you?
Yeah, I'm primarily on Twitter. I think my handle, I don't even remember my handle. I think Omar Agag 6 or 06, something like that.
Don't follow
Um,
the wrong account, guys. We'll link it below in the
yeah,
description.
just
There's
put
too many
yeah,
fake
I'll be in the
accounts for
link.
you to be guessing. All right, guys,
Yeah.
take it easy. It's another incredible episode of the Expert Trader podcast series. Take it easy. Happy and safe trading. Peace.